Hey everybody, welcome to this free edition of our Trader Usual Weekly Roundup for the trading week ending July 23rd, 2021. I'm Preston Brent. Thanks for tuning in. This week's theme is money continues to flow into the equity market. It's although as we move higher, volume falls. So let's take a look at where we were this past week. We'll take a look at the indexes and then we'll just kind of see how the performance moved itself out here. So if you look across the U.S., everything finished solidly in the green for the week. Year to date, solid in the green. PE ratio, forward PE ratio is 22.41. You can see the dividend yield for the S&P came in at 1.33%, which is slightly higher than the 10-year Treasury. So that continues to funnel money into the markets, and you can see the VIX closed the week at 1720, which is down slightly, about 6.78% from the prior week's close at 1845. Best performing sector for the week was communications. Worst was utilities. You can see the annual best performer is still energy at 30.7%. And the worst performer for the year is staples, still coming in the green at 6.4%. But we can see on these equities, we started off really negative on Monday with the Delta variant kind of scaring folks, but then we had a very strong finish with technology growth related stocks continuing to outperform value stocks 5 weeks in a row. Okay. We also, believe it or not, saw the Russell actually go into official correction territory on Monday. I'll show you the charts in a minute. I'm surprised no one picked it up in the press. But then out of those steep declines, we saw the buy the dip crowd come in and just kind of take everything to all-time highs in the S&P and NASDAQ. All right. If we look at some of the economic data, well, you're going to see that housing still continues to give the bulls a lift in the middle of the week. Existing home sales, rose for the first time in 5 months, although we did get weekly jobless claims hitting the highest level in 2 months at 419,000. Okay. But we're getting very strong Q2 corporate earnings. And that is really helping put a little bit of a bullish tint into the markets this week. And I'll probably carry over into next week. This was the second busiest week of earnings. We had about 81 companies out of the S&P report, of which 88% of those companies actually beat their earnings per share estimate. 86% beat the bottom line or the top line number. So year over year, we're coming in at 20.2% revenue growth. That's one of the best growth that we've seen in a couple of decades. Really amazing that we're seeing this data, but it shouldn't be a surprise. But we're getting near this peak earnings growth. If we look at U.S. Treasuries, same pattern as equities this week. It started off very poor. 10-year benchmark started the week really spurred like the equities by this Delta variant, afraid of more shutdowns. We had the 10-year yields coming in Tuesday at their lowest level since February of this year. But we did see a rebound in yields just like we did in the equity markets. And of course, if we come over and look at the European markets, you can see in the European markets, everything was in the green from the Euro stocks, FTSE, CAC 40, DAX, all in the green, weekly and year to date, solid in the green. We did get the ECB come out with their policy statement from Christine Queen Bee Lagarde. They had said that they're going to keep rates at their present or lower levels until they see inflation reaching or hitting 2%. That's a change in their policy. It used to be until they saw inflation approaching 2%. Now they've changed it to say reaching 2%, much like what Jerome Boom Boom Powell, Power Ranger Boom Boom Powell has done here, our Fed chair. Doing the same thing. We want to see hot numbers coming in, and then they'll come in with interest rate hikes. But outside of that, they're going to cut stimulus over in Europe when they start approaching those levels, much like what Boom Boom Powell is going to do here. We did see over in the Eurozone as well, PMI data come in. Their composite index, which combines both services and manufacturing, it climbed to 60.6. That's the highest reading we've seen in Europe since 2000, summer of 2000. So very strong numbers, guys. And over in China, it was a very no information week for economic data, although we did get new home sales in the first half of the year, doing very well, up about 38% year over year. And we're seeing floods in China which may affect some of the supply chain issues, as if supply chains don't have enough problems as it is. Okay, so that's kind of what we're seeing there in this market from these standpoints. But let me switch you over to the screens. I want to show you the charts here real quick. Let me just, it's going to take just a couple of seconds to come over. But we're going to start off with the E-minis. I'm going to show you the volume on the chart, and you can just see the negative impact of volume moving higher, or as price action moves higher. So if you look at it on that move there, as we move lower, then volume moved up, right? But then as we moved higher here and made new highs, volume came right back down again. So that pattern there is not the pattern I want to see right here. It's just the opposite, okay? Ideally, we want volume to follow price. So if price moves higher, we get volume moving higher, but that's just the opposite of what we saw. Even though some money's coming back into the market, this just means that it's very selective where the money is flowing to. That means the breadth of the market is getting weaker. So that just means that drops like this are going to be more present. And as we come into this week, this coming week, we're going to have 180 companies report, of which we're going to get on Monday Tesla, Tuesday Apple, Microsoft, and Google, Wednesday Facebook, and Thursday Amazon. So it is going to be one standout week for earnings. And to top it off, we get Power Ranger Boom Boom Powell, our Fed chair, speaking on Wednesday. They released the FOMC policy statement, but everybody's going to see what Powell's going to say at his press conference. So this is on Wednesday, 2 o'clock for the policy statement, 2:30 Eastern time for the press conference. And we got to watch markets very closely on that, okay? So it's going to be an extremely active week, 180 companies reporting. So far, everybody's blowing out their numbers. I think that's going to continue. That could give the lift to the markets. Let's watch very closely, because limited breadth of the markets being held up by a lot of these FANG stocks. I want to see how these FANGs report. Probably going to blow out their earnings, but I want to see how price action reacts to that. Okay. And of course, if we come over and look at well, speaking of the FANG index, let's look at this special index that I've got here of the FANG. This is Facebook, Microsoft, Apple, Google, Amazon, and Netflix. You can see this move lower, higher volume, move higher, lower volume. So again, we're not seeing the pattern I want to see, but we did make new all-time highs on Friday, okay? So we're going to get these earnings. Sometimes I've seen these tech companies run up into earnings, and then after earnings, they sell off a bit. So let's see how this thing plays itself out. If we come over and we look at NASDAQ Futures, you can see with NASDAQ Futures, again, on Friday, all-time highs, okay? If we look at the E-minis, on Friday, you're going to see here in the E-minis, all-time highs, right? But again, that declining volume is not a good sign. And then if we look at the Dow, their last all-time high was on May 10th. As you can see here, the all-time high was made back over here on May 10th. We came very close by just a few points, but we just having trouble getting over that 35,000 level in the futures. But again, low volume here, guys. That's not a good sign. Now let's look at the Russell. This is the one that officially went into correction territory. And if I show you this chart here, you're going to see, again, low volume as we've been, actually the volume has been picking up as we've been moving lower. And the minute we have any kind of bounce up, volume comes down just a little bit. But if I were to just do the measuring stick here, you can see if I come down here intraday, we were down about 11.2% on that intraday low, okay? And I think the final close was not in correction. It was around 9.8% roughly, but we were officially in correction on that day, right? July 19th. That was on Monday of this week, and then we bounced hard out of it. But look, we're still below the 50 EMA on this thing, so we're not doing good there. Members, I'll go through with you how a good, and I've reviewed this with you several times, how you can tell this is the dip you want to buy, or this is the dip you want to just sell into the rally when it rolls back up. We're still in a buy the dip mode, guys, just kind of cut to the chase. But members, we'll go into that in a little bit more detail in tomorrow night's weekly market watch. Okay. So that's a little bit about what I'm seeing here. And then, of course, if we look at the Dow Jones Transports, right? Dow Jones Transports is moving along with the Russell, okay? If we look at the Dow Jones Transports and we just kind of put this out here like this, and you can see where we fell to here with the transports, we actually, on that intraday low, we were down in official correction territory on the transports, okay? So when we are going right off the correction lows here, right now on the Dow Jones Transports, we're sitting around 8.6%, right? So we got to be really careful with this because typically the transports and the Russell are bringing up the rear as far as performance. Although year to date, the Russell is still the Russell was leading the way. Now it's behind both the S&P and NASDAQ. It's actually slightly ahead of the Dow. But we want to see a lot more leadership from the Russell to see this market running much higher. We're not seeing it right now. And of course, if we look at Bitcoin, you can see my target for Bitcoin was around 27,000 right down here. We hit this hard stop point here, which is around the psychological barrier of 30,000. It's going to have a hard time getting up here, but if we can clear these two, then we're going to have a run in Bitcoin. But right now, the odds favor a little bit of a rollover and then a little bit more of a consolidation around the 27,000 level. That's kind of what I'm seeing right now. And of course, if we look at the VIX, you can see the VIX is in the yellow zone here. That yellow zone just means basically choppy markets. If I were to zoom it out a little bit, you can see here, choppy markets. The yellow zone runs really from about a 15 VIX all the way up to about almost a 20 VIX. When you're in this area here, it's just choppy, meaning profits can disappear very fast and turn into losses. So for our options traders out there, you want to be fast to take profits in these things and just not let your trade linger. If we moved up, now we did earlier in the week actually hit a high in the VIX of 2509 right here. It was a fast down market, really. And then not slowly, in just a few days, the markets pushed us back into the choppy market zone right here. And again, different option strategies are called for in different zones of volatility, okay? And keep in mind, this is index volatility of the S&P. You could draw this for any individual asset you wanted. So Amazon's got its own volatility levels, just like fingerprints. Each asset, each stock has its own volatility ranges that you want to honor when you're executing option strategies. This is just for the VIX for the S&P 500, okay? And of course, if we look at the 10-year interest rates, you can see it's down. It just fell off the table. It's well below the 50 EMA, and it's barely hanging onto the 200 EMA. All right. So the odds favor any rise in interest rates to roll back over. Now, this is in a way scaring the markets a little bit because when it got down lower, if you look at it on Monday, it was very low, right? And it scares the market because interest rates is really a vote on the long-term view of where the economy is going to go. And with interest rates staying low, the bond market, which is considered smart money, is saying the markets are not going to perform as well over the next several years as you would want them to, right? And members, I've talked about this a number of times on market performance on a decade by decade basis. And because we've pulled forward a lot of our earnings growth from the 20s into the teens, coming off of the 2008 with all this money in there, that just means going into the 20s, you're not going to see these. You may have the odd outlier, but the odds favor the S&P performance to be a lot lower, to the tune of at least 50 or 60% lower. And I suspect we're setting ourselves up for a pretty good little bear market in the next few years. But anyway, that's for a whole nother session. But if we look at interest rates, very low. If we look at the bond market, obviously just the opposite. It's moving higher. The bond market up in these levels up here, I'm more interested in doing shorting the bond market. If we do get that 5 to 7% pullback as we round out our summer months, you'll see bonds probably spike up higher. That would be probably a better time to pick up shorts in the bonds. So that's kind of what I'm looking at right now. Okay. If we come down here and we look at gold, gold is just kind of flatlining right now. It's not going anywhere. I do believe that's a pretty good support area down to about 1770. I think we're going to kind of flatline here for a bit. Longer term, I think gold's going to go higher. Short term, it's just chop. I'm not even, the only trades we're running right now are long term, 1, 2, 3 year trades in the gold markets using a strategy that I've worked with our members on. So that's something that I think we're going to be playing here long term with gold. Okay. Same thing with Bitcoin. Same kind of strategy we're using for Bitcoin as well. Okay. If we look at the oil markets, you can see here oil. There were 2 fade the move trades. We had one over here when we hit this Elliott Wave 3 and it started to pull back. I suggested we fade this move. I think I even mentioned it here to you guys in our free roundup to fade the move. It worked out very well. Same thing over here when we hit this Elliott Wave 5. I said fade the move. If we do get back up this level, it's going to have a hard time doing it. I think it's going to roll back over. But the bottom is fairly well defined around the 55 level. So doing iron condors or call condors here so you can lean a little bit bullish if it starts to move against you, to me makes a lot of sense. Okay. All right, everybody, that's kind of a quick and dirty of the major markets and where we're sitting right now. Members, I will see you this Sunday night for our weekly market watch. If you're not a member, I highly encourage you to come in and sign up. We're doing well. We're going to have a really interesting second half of the year. I think there's going to be some really interesting surprises coming up that'll offer up to us some really great trade opportunities. Have a great weekend, everybody. Members, I'll see you tomorrow evening. Take care, folks. Ciao.